You are listening to Mining Stock Education.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers, with my friend and co-host, Brian Leni of Junior Stock Review. And in today's show, you're going to get our monthly Junior Mining Insights chat discussion. We're both investors. We both spend a lot of time thinking about this sector, talking to people, going to conferences. Now, Brian, you were in Vancouver last weekend. You live outside of Toronto, but you flew to Vancouver for two conferences, the Metals Investor Forum and the Vancouver Resource Investment Conference. I was scheduled to go, but my personal schedule changed at the last second, so I couldn't join you. So I'm going to kick it over to you to answer the question, what was sentiment like at those two conferences, particularly relative to past conferences that you've attended?
I think most people can imagine that it was excellent. It was even better than I even would have guessed. A lot of people have made money. If you look at how the market has moved, particularly in the last 6 months, this is where the real push has been. And you can see it in both the number of people and the number of smiling faces that you saw. For my talk in particular, that's the one that I can only attest to. It was basically standing room. All the seats were taken, and there was probably 2 rows of people at the back. And I heard that was what other speakers were experiencing too. And that's fantastic to see. You know, there's interest in the market. The people are willing to put the money in, and really indicative of where we are. What that totally means, I think, is probably up to the eye of the beholder. On the VRIC side, I was only there for the Sunday, and again, I thought it was definitely busy. I'm not sure that it was bigger than it was in last year or maybe in prior years in terms of number of companies or number of rows dedicated to company booths. But again, the sentiment was fantastic. The jubilance or the amount of interest of where to deploy money is definitely there, and it's a whole other sect of investors that hit the VRC as opposed to Metals Investors Forum, which I think is pretty interesting. But yeah, overall, it was fantastic. And again, for those that are looking to parlay that into where we are in the market cycle, that's the perspective. I'm not sure what conclusion you can come to, but that's just me.
Or in regards to the demographics, was it mostly older, gray, and bald heads, male? Was that the predominant demographic still?
Probably. What I'll say is this, is that, you know, obviously I run a newsletter. I can, again, attest to my own metrics, and I've seen a huge uptick in a younger crowd. And I met a bunch of them at Metals Investors Forum who specifically came there to meet me and watch myself on the panel. And I would say that's a really, really good sign. Outside of that, you do see the norm, which is the older investors, the boomers, and they definitely haven't gone away. And I would say that's the cohort, obviously, with the most amount of money. But again, there was a younger crowd there for sure. And you are starting to see these guys probably have some free money. The guys that I was talking to are in their 30s and now have been working for probably at least 10 years. And so there's some money to be made. And I'll also say that those guys were mostly crypto investors beforehand, which is an interesting transition of how money is flowing. Not that crypto is dead or blah, 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 but obviously there's something that's happening in mining that's catching people's attention. And I think that's obviously an important thing moving forward.
How would you address or assess their sophistication level for understanding mining investments if the crypto guys are starting to look at junior mining stocks? Were you able to ascertain that via discussion?
Oh yeah. Some very in-depth conversations. What I would say, it's across the spectrum. In the conversations, they definitely brought up questions that I would not have expected them to bring, considering how green they are to the sector. The other side to that is it also didn't take too long from me questioning them to sort of find the ignorance. And I can see, actually, you're kind of triggering me to think about this. Considering what some of them brought to me in terms of the companies that attracted them, I think it shows you the power of good marketing, because 100% they were attracted to macro, and macro in terms of obviously the macro theme, whether it's gold or silver, but also macro and how the company presented themselves in terms of number of ounces, where they're located, number of projects, this sort of thing. But really well, they say the devil's in the details, right? And that is where you have to sort of break down and look, because not all silver ounces are created the same. Not all gold ounces are created the same. And that's where that disconnect is. But they're asking questions, other than that are very good. They're concerned about jurisdiction. Again, something I wouldn't have expected some of these people to be concerned about at all. But for whatever reason they were. So that sort of caught my attention. But I wanted to ask you, Bill, obviously Mining Stock Education is your baby, and you're doing interviews. You've seen it over the course of the last 10 years. Do you put any weight into what you're seeing in terms of, let's say, view counts, like counts, number of comments, the types of comments? Does that play into Bill Powers' process?
It does, in terms of sentiment. And what I'm able to see what people respond to, not only on my own channel, but I just kind of in the fly in the wall, to where I observe a lot. A lot of my online activity for mining stock and junior mining stock speculation is observing conversations, observing how people respond to certain content. Because as you mentioned, marketing can bring in so many eyes, can bring in so much money, that it affects these little smaller market cap illiquid stocks so great. So you want to understand those things. And one of the more recent comments is, I've been getting more complaints on the YouTube channel about, you guys are talking about your profits too much. You guys are talking about selling and capturing your profits and even bragging. And recently I had a number of comments, a larger segment of the comments saying, your guest is bragging too much about his success. It's getting annoying. So my response was, listen, just for your own learning, because even in a bull market, you should be constantly learning. And even if you didn't deploy money at the bottom of the market, my perspective is learn the cycle, because there's going to be another cycle. Maybe gold's bottoms out whenever it bottoms out next, years in the future, but there's going to be a critical metal or a metal you're not thinking about, it's not on your horizon right now, that you're going to be able to make money in. So learn the psychology of investors so that you can then self-critique yourself. A message, a theme that you and I lift up all the time. So I just said, listen, for most of the time since I've been doing this, I published my first interview or video late 2016. And now we're in 2026. I said, just view this as part of the psychology of the sector. Yes, we're bragging a little right now, but we're bemoaning most of the time. And the bragging periods over my 10 years doing this have been short, it's like 6 months duration, and maybe this one will be a little longer. 2025 would lend one to, brag a little more, but where I'm different than past cycles, Brian, and part of it was some painful losses in 2022 through 24, is that even with my success, I'm just not giving myself the benefit of, you're making money because you're so smart. I'm just telling myself, you're not as smart as you think you are, even as you're making money. And so I see that psychology in the comments. And I also see the psychology, Brian, of things have gone up. And if you tell somebody this is the next silver 10 bagger, even when that stock is up eightfold off of the 2024 bottom, there is a large segment of people that are going to believe you when you say that, which speaks to investor psychology as it relates to these small speculative stocks, which means if you can learn the psychology and you can learn what to look for and what to look out for, you're going to give yourself that investment edge. And I guess when you reference talking to the brothers that came from the crypto sector, the opportunity, they're not going to understand the minutia of what to look for like you, right? So if there's an edge, it's not going to be in the most marketed company perhaps, but it's going to be in some of the smaller companies, maybe where you would be able to perceive value before someone else perceives it. What do you think?
Oh, for sure. And that's in my presentation, I was talking about how that's harder and harder to do because really that easy money has been made. And now everything is, not everything, but a lot of things have caught up. I would say that the market definitely looks at least fairly valued, generally speaking. And so if you're a value investor, if you're a contrarian investor and you're looking for that next value play or where to rotate profits, it's hard. It's definitely a lot harder and requires more thoughtfulness into terms of how you think that share price is going to be realized, or appreciation is going to be realized in the future. And even looking, like, one of the slides I had is like, what's next? And yeah, because I've been looking, I'm not afraid to take profits, and I do have a cash position in the portfolio right now. And I've looked at lithium. I've been looking at the different nickel projects, and I'm really surprised to see and nickel, I think, might be one of the best examples where there's reasons to be positive on nickel, 100%. The nickel price hasn't responded yet in any big way, and is still, what I would say, well below the incentive price to bring on new development. Yet, a good segment of the best junior nickel companies have all moved, in some cases 2 and 3 times off their bottoms. And so it becomes super hard to try to redeploy money when things are that way. And there's opportunities out there, don't get me wrong, and I will find them at some point. I'm seeing what I think I would relate back to what a gold bull market does to the entire sector. And if you look back in history, a gold bull market is really that kickoff point for basically everything else to sort of take their turn. And the market, I think, does get ahead of itself, and it gives credit before it's necessarily due in all of these companies. And like I'd say, again, you look at these companies and you would say, yeah, they're making good progress, but I wouldn't say, especially considering what the nickel price is now, unless you take a really bullish view of where the nickel price is headed, I'm not sure they necessarily deserve a triple off their bottom. And again, and I don't want to take away, because these are quality companies, but it's more my frustration speaking in terms of somebody that's looking for value, and it's becoming that much harder to do. The other thing I wanted, you spurred something, is I didn't get to watch Rick's speech at Metals Investors Forum. He was, I think, at 10:30. And by that time, I had already been off stage and was doing one-on-one interviews with the companies that were on my panel. So I didn't get to watch it live, but I was on the plane and I was watching it. And again, if somebody hasn't seen this, you definitely want to watch Rick's speech from Metals Investors Forum, because I think there's so much to be gleaned from it. But in particular, what I thought was both funny and very observant is that he talked about the anger of investors and how he equates people getting angry at him selling or making a move that's opposed to the bull market momentum as being a sign that he's doing the right thing. And I thought that was quite comical. And I'm so glad he brought that up, because it puts so many more things into context when you hear stuff like that. And I think it sort of echoes what you were saying yourself in terms of the comments you see with some of the videos and people talking about taking profits or, bragging, however that might come across. Would you agree?
Oh, definitely. And, Rick has been on record recently that he sold his silver, my understanding, via the Sprott Physical Trust. And because the silver miners didn't move up with the silver price, then he transitioned, and they're going to make a lot more money at $115 an ounce silver than they would even in December at 60. I mean, it doubled. The price doubled since December. That's crazy. And so he moved some of that money back into the silver producers, because if the price holds even 20% below where we're at, then when those quarterlies financials start reporting, there should be a move up. And he said he did that because I'm a disciplined speculator. And so that's something you would like, Brian. A disciplined speculator, which means your emotions don't rule over you, the opinions of others don't rule over you, but you study others in order to better understand yourself. And when Rick has made comments about why he's on Twitter, it's to my earlier point, what I said about myself. And I did this even before I heard Rick say it, but he studies other people talking junior mining on Twitter to get a gauge on sentiment. Not because he's going to follow them off the cliff or even up the hill if they're right, but he's going to use that, and that's one data point that he's going to use to assess where we are in the market and where he can make money.
Yeah, it's sage experience.
Okay, and I'll add one thing on since we're talking about Rick Rule, which I guess every monthly we talk about Rick Rule, and that's because I've learned a lot from him, and as have you. He's had an influence on a lot of people, been on the show probably 30 times or so over the years. And when I interviewed him last, and that interview went over well, and we talked about how he's bullish on the oil stocks and he's moving money into oil and gas, I asked him, what's the role of a newsletter writer, and how should someone wanting to understand the sector utilize the newsletter writer? And I'm going to point out what he said. The two things that you and I do conversationally when we assess information, we do that. I don't know if it just becomes instinctive, but he says the first thing you do is assess bias, and you be able to discern bias, because everybody is biased. It's not if they're biased, it's how they're biased. And a bias isn't necessarily immoral. It could be amoral. The bias should be disclosed, but even if it's not disclosed, you should be thinking, how is this person biased in the information they're presenting to me? So he said you should understand their bias. And the second thing is you should understand their process, or I'll add in, you should understand their strengths and weaknesses, so that information that you're consuming, you understand it's filtered through a bias. You understand it's filtered through certain strengths or weaknesses or preferences. So for example, I have conversation with some people, you talk to people at conferences, and there's some guys, they only think about the royalty sector. Other guys, you talk to them, they're only thinking about the producers relative to what they can make in tech stocks. Other people I've talked to, they're non-geologists. They just love early stage porphyry exploration. So every time you talk to them, it's about, this could be the next porphyry. It's only a $7 million market cap. If you can be a part of this financing before they start marketing the company, you can do well on the uplift from marketing, and you could do really well if this porphyry ever comes to fruition. And so when we're talking to somebody, we're saying someone's presenting you that information, and then you can just be forthright. I remember let me jump back to when I was in the construction industry, and we would have a new sales rep come in to our conference room and present us with a product. And I remember one time they were saying, you guys should get in it's Michigan, it's really bad weather out there. So instead of just doing roof and siding and gutters primarily in the winter, you guys should do these walk-in tubs for the elderly. You make $15,000, $20,000 each. And we would just stop the guy and say, okay, man, what's in this for you, bro? Why are you here? And then we'd just be further, how do you get paid? And we say, I don't have any problem with you getting paid, but I just want to know, as I factor into, do I want you to be my supplier for this product if I decide to sell it? I just want to understand the supply chain. I understand where your incentives are, so that I can filter what you're saying. And are you pushing this walk-in tub on me because you make a 20% commission on this, whereas this other product, which maybe actually be better from a quality standpoint and better for my company, you only make a 7% commission. So maybe you're not going to talk about that as much, right? So you're talking about bias. And then sometimes you talk to the guys and you're like, man, this guy doesn't even understand the product very well. So I don't even take the information that he's talking about with so much weight. So, flipping back to mining stocks, you want to be able to assess bias, and you want to be able to assess where the frame of reference and how skilled is this person when they're talking to you about a specific investment or a segment of the sector that you might invest in. Your thoughts?
Absolutely. And I think, I think it parlays into something like skin in the game, whether that be a newsletter writer, an investor, whether that be someone involved management within their own companies, their junior company that they are part of.
Brian, can I interrupt? Or I'm going to interrupt you and pass it back. So I was at a conference in Las Vegas, a microcap conference, 3 or 4 years ago. And I was talking with a junior mining executive, and I've never told you this story, I don't think. And I was with two other newsletter writers. We were standing there talking to the CEO, and the CEO was telling one newsletter writer that so-and-so recommends my company. And the newsletter said back to the CEO and said, but do they own your company? And the CEO said, that's a good question. I don't know if they actually own my company. So I kind of set you up to help you prove your point, but go ahead.
Well, that it's so funny that you say that too, because actually I was somebody stopped me on the floor of the VRIC, a gentleman, and he wanted to express his gratitude to both you and I actually for this monthly chat that we're doing. And he went on to say, he said, he asked me if it was a requirement for me to meet the management of the junior companies that I'm invested in or talk about at Metals Investors Forum. And I was sort of confused and like, well, yeah. And he said, he laughed and he said, well, he was at a booth where the guy, one of the newsletter writers, was introducing himself to the CEO of the company, and I guess he heard and was kind of flabbergasted that even happens, and I was kind of taken back too. But I'm sure it does, and I'm sure that is, that's why when it comes to Twitter or it comes to any type of social media, especially when the person doesn't disclose who they are, you really have no clue what the connection is. Any of these things that we're talking about, how to discern where this person is coming from, any conflicts, any bias, you have no idea. And that's why it's so crazy that people would even take it seriously, but they do. And then it's also indicative of when we were talking about earlier with how marketing works, and it works on the macro or works on the high level, is because this is the other part about being an investor in this space, is that not a lot of people like to do work. And that is, so if you're willing to put in like even a half-assed job, you're probably ahead of most of the sector, especially when you get into these bull market moments when it's all about the momentum, it's all about speed from some people's points of view, and people are just scrambling. And so I think if you have that perspective, it gives you a better idea of what's going on. And then, I think we talked about this in the last, like for me, I'm much more methodical. I take my time. I don't like to be rushed. And when I get into these moments when I'm feeling more rushed to make a decision, or prices are appreciating before news, and I can't even sort of get to the point of making a decision, I think that's very telling of where we are. And then again, I'm not calling a top or anything like that. I'm very bullish on metals, and I think metals over the next bunch of years are going to go higher. But, things move in certain ways. And what I mean is that when you start reading all these different signs about where we might be in the interim, it's extremely bullish. And I think it should give people more pause than it sort of probably is.
So you did a site tour video for Hot Chili in South America. I watched that on my big screen, and that was it had a different feel than any of your other ones, which is very unique. How each field notes video, which for those that don't know, Brian does site tour videos. I'll link to his YouTube channel, Field Notes with Brian Leni, where he takes you to site and he talks to management, sees the project up close and personal. And if you haven't been to a site tour for one of these companies, at least start by watching Brian's videos. And my question for you is, what did you learn different about this one than others, any site tour, not just when the cameras are following you for the YouTube channel, but just for your own learning? And then my second observation is that was probably the only site tour video I've watched in which you focused, not just you, but the general you of people who make site tour videos, on community engagement as a percentage of the length of your video. That so much was on the social aspects, which, they could say, oh, well, that's boring, people won't watch through that. Why did you include such a large portion of that video with the social aspect of what the company was doing for the community?
First, thank you very much for bringing that up, Bill. And then, so this last site, all these site visits are so different, and each story, each company is so different. And I think that, with Field Notes, while it is very much about me and how I deploy money and how I came to be where I am, you are seeing exactly what each company is about, and it's very raw. And with Hot Chili story in particular, and I think every company has obviously the power to be as impactful as they are. But they are definitely a part of their local community. And that's something that I'll say, it wasn't something that I necessarily learned, but it just reinforced the impact that mining companies can have on their communities, both as juniors and as, senior producers, if they want. And, when you watch the video, when you see us, myself, Andrea, Marcelo, Fernanda, when you see us go to the orphanage, when you see us go to the school, and you see the connection that those employees have with these people, it's very real. Like they know them, they've seen them before. They certainly, and what I can tell you is they certainly rely on whether it's financial or that physicality of actually being there. And I think, there's probably nothing better that you can give in terms of charity than your time. Time is, and the older I've gotten, the more I realize that your time is the most important thing, and they're giving it, and they're able to impact, those people in the communities. Not only that, but when that thing gets put into production, you're going to have jobs, you're going to have wealth that's created. Their particular story involves water and how water is going to impact this super dry desert. This is in the middle of the Atacama. It's the driest place in the world. Water is a lifesaver, both for a mining operation and for local communities. And I think that, again, is just what shines through. And for me, really crystallized the impact that these companies can have. And it's not just something that they're talking about in a corporate presentation, which I think a lot of us, we hear it and we say, oh, that's good. But you don't really go past that in terms of your thoughts. So being there, being able to experience it, seeing that it's real, was super meaningful to me. And I think for especially company executives that have seen the video, it's something I think you should take to heart and try to make an impact. And not just one that's related to marketing, but really do try to do something good for the community that you're going to be impacting, because you're certainly capable of doing it.
Okay. Now, let me just apply what we taught prior to you sharing that to what you just said. Since we spoke favorably of Hot Chili, let's do our disclosures of bias. So I don't own shares of Hot Chili. They're not a sponsor of Mining Stock Education, but you own shares, right? And they paid for the production of the video.
Absolutely. Absolutely. I own shares. They paid for the production of that video. Highly biased, in my opinion, and in every way.
And then let's go to process. So why did that company fit your process, or why did your process or your strengths lead you to this company relative to other companies?
Last year, after the release of their PFS, the market, there was more than just their PFS. There was a number of things that were happening in the background too with their board, that I thought brought some negative attention to the company. The PFS showed that the Costa Fuego is highly capital intensive, and the return on that capital invested was going to be below probably a threshold that a lot of investors probably wouldn't consider to be investable. I looked at it. I saw how much the share price had gone down. Basically, when I bought the company myself and then suggested it with my subscribers, was at around a $50 million market cap. And this is for a company that had just completed a PFS on a 1 billion ton porphyry in Chile, and had the Huasco water, which is a major part of the story in terms of valuation. Essentially, they control the water that is going to be used not only for their own project and for the towns along in the Huasco Valley, but also control the water that is going to be sent into the higher altitude Atacama. And this is some of the biggest projects that you can see. And of course, they don't have any deals signed yet, but ATEX, Filo, Jose Maria, there's a number of companies, huge projects that are probably going to have to do a deal for the water that's going to come out of the Huasco Valley. And Hot Chili is a big part of that ownership. I can't ascribe a value to it. I couldn't back then, but I know it's worth something. When you have all those things come together, and you have what I think is, for me anyways, an environment that is going to require more copper for the ascent of humanity, and I think it was the perfect contrarian or value play. And so that's why I was an investor first and foremost. And I'll add this, that, Field Notes, while the companies do pay for the production, and while I do make some money from the production of that video, it's not a requirement. And it's something that if the companies want to do with me, that is absolutely their choice. But to me, I thought, with the story where it is, the opportunity that I see in a copper market that I thought was on the horizon, to me, it was the perfect, the confluence of the situation was fantastic. And
your portfolio is developer. You gravitate, your process tends to gravitate to the developers because they give you the data points that you like to lay out and analyze. So that's where, like, your process, that would be one of the strengths. If someone's listening and they say, how do I assess Brian's bias or process as a newsletter writer? You like those developers. That's where you like to go, right?
Yeah, absolutely. Like, I'm not a geologist. I'm an engineer. And so I'm analytical, and I do need something I can put sort of numbers to quantify, because the quantification of, and this is sort of how you get to understanding what the price to value ratio is, like what the opportunity is. And at a $50 million market cap, again, quantifying this, $50 million market cap with a company that probably has an NPV, especially at $6 copper, well in the billions. This was huge opportunity. And then you see how the share prices responded even before copper got to $6, and you start to get an idea of how rare these opportunities sort of are. And I think, the advent, what made me comfortable with the whole situation with Costa Fuego was this new discovery at La Verde, which I thought would be able to provide, a certain amount of tonnage, higher grade than the existing deposit, at the front end of the mine life, which anybody who does DCFs knows in a discounted cash flow, the more cash or the more profits you can have on the front end, the better it is for NPV. But the bigger point was that it pushed out at that time the block caving capex that was supposed to happen on Cortadera. It pushed that out. And again, you get more profits in that front end, that front 10 years of the mine life, which matters. And again, that's why I think you've seen the re-rating and sort of where they are today.
Mm-hmm. And how many developers do you have in your portfolio? Like, as a percentage, would you say?
I would say the portfolio is probably 70% developers. And then if you look at, again, how I look at my bias or my skill set, the way I typically invest in exploration is in the high quality prospect generators. And what you'll typically see from me is that I'll invest in the prospect generators that have some sort of backing, what separates them from this sort of glut of that type of business model. And the Kenorland mineral type companies out there that have some actual intrinsic value to them. And again, that was MSC sponsor, but that again, if you look at where that was bought and why it was bought, that's a company that has seen their share price appreciate dramatically over the last year as that initial discovery in Frotet or Renault has come to the market realization stage. And that's my process for picking companies.
That's excellent, Brian. And you bought that at like 60 cents. You were buying Kenora, right?
In the 60s, yeah.
Yeah, so it's, what are you, 4x on it? Something like that?
It's pretty good.
Right. Good. So there's bragging for you. Bull market, successful company, bragging. We all have our losers. Brian and I have talked about our losers too. So we don't only talk about our winners, but it's good to celebrate the winners. And I'll point out for that one, that is a multi-year winner too, right? So a lot of the people coming into the sector when things are going up, their time frame is like, give me a 10 bagger in 20 days. And you're like, what are you going to do in 20 days? You're going to spend $300,000 on a marketing campaign. Maybe you get a 20% move, but you're not going to get what you're looking for, and it's not going to be sustainable. But you take the long-term perspective with a company like Kenorland, past sponsor of the show, then, over a period of years with a good team that knows what they're doing, they can create value. And they can create value through the market cycles, right? That's another important point that I always think of when I'm investing in junior mining. Well, is this like a cyclical, upcycle dependent speculation, or can I hold this if things turn over? That's something people should be thinking about too, even as we debate, like, when is the top? $5,300 gold, $115 an ounce silver. And if you even talk, Brian, going back to investor psychology about, oh, this might be a peak or even an interim peak, there will be a significant segment that'll come out in the comments telling you how stupid you are because of the currency debasement and then why silver is still undervalued even at this point. And I understand their argument, and I agree to it, but I think I'm going to enter the confessional booth for the second monthly in a row, Brian. I confessed my sale of some gold bullion, and when silver hit $115 an ounce, and I bought a bunch of silver at $15 an ounce, a whole bunch in the low 20s years ago, I said, you know what? Not all of it, just a little of it, I'm going to sell for $115 an ounce. And the coin dealer cut me back $10, and I netted $105 an ounce on my silver. And to be honest, it felt good. It felt good. I understand why I bought it. I still am holding a significant amount. If the world is a Mad Max situation because of currency debasement and there's food shortages and riots like some people predict, I still have some preparation for that. But in the meantime, you know what? I'm going to capture some significant profits on my silver bullion.
I think that's excellent. And I think the biggest takeaway from something what you just said and is the sort of self-realization that ultimately we all have to come up with our own decisions on what we're going to do. And it doesn't have to make sense to anybody else but ourselves. And that's what's so important. The voices, whether it's you or I or anybody, you take those as data points, you take that as knowledge that you can add to the how and the why of the sector. But you don't necessarily need to listen to anybody else for the what. And you need the what or when you need to decide that for yourself. And ultimately you want to, detach yourself from the crowd. And that is like, if you look at all the sage investors, whether it's Buffett, whether it's Rule, they're all going to tell you that when you're feeling smart, when you're feeling comfortable, that's probably when risk is at the highest, and vice versa. When you look back at the bear markets, when you had time, when nobody else was caring, that's when there was the least risk. And so it honestly, and a lot of people hear that and they nod their head. But I'm telling you, until you sort of get into it and start of experiencing yourself, making your own decisions, I don't think you fully feel the weight of it. And I can tell you, I've done this for 10 years now on my own. I feel the weight of it. I feel what it's like to be on both sides of the coin. And now this being like my third real push of a bull market, I'm definitely better suited than I was, 10 years ago. But I feel it so much more than I did before. And I can see the mistakes that people are going to make. And one of the things that I said in my presentation at Metals Investors Forum was, if you did a survey 5 to 10 years from now, my bet is that if people are truthful to themselves, the biggest mistake will be not taking profits or not selling enough in this bull cycle. And I stand by that every day of the week because, having been there myself and seeing how susceptible we all are to greed, I just think that's likely where problems are going to occur for people. Excellent.
Any other insights from Vancouver, your trip? That
I wouldn't say Vancouver, but so we've talked about failures and successes, and we talked a little bit about today, and we've talked about this in the past too. And then I was reading this book, and this goes back about a month, and it's sort of been hanging on me because I know how important it is to learn from your failures. And I know, and certainly what I just said to people is rooted in my experience and rooted in the failures that I've had myself. But in this book, and it's given me such pause, because what this guy said is basically this: in the short term, like when you have a failure or something doesn't work out, is that you should definitely try to learn from it. But then he said, you need to forget that as soon as you can. and concentrate on the successes and the things that brought you to where you are. And I think it was somebody in the comments after maybe the first time we talked about it said something maybe along those lines. And I'm not even sure, who knows who that person is and what they meant by that. And it could have been superficial. But I will say this, that in retrospect, and probably because of the author that it came from, I'm playing with the idea more. But I wanted to ask you, when you hear something like that, what you think.
I think of an NFL quarterback, because in the NFL, the quarterback is the most important position. And the game's tied, they're driving down, the quarterback throws an interception. Everybody is ticked off at the quarterback. The other team goes 40 yards the other way, kicks a field goal. That quarterback has another shot to now drive 80 yards down the field, down 3 with 1:20 left. You cannot be thinking about that interception that you just threw. You have to be thinking about the play, the opportunity, everything you went through in practice, the routes your slot receiver is going to run, everything, the fake, the play action fake, and how that's going to play into the rollout that you're going to throw to your tight end. And so you have to be thinking about execution. You can't be burdened by the mistake you made, and you can't be second guessing. So your confidence should come from when you go to the sideline and they give you the Microsoft tablet and your coach and your teammates review the play with you, and you talk about, it's miscommunication. If you would have just cut 3 degrees less to the right, you would have caught it and it would have been in the end zone. But because you didn't, and the defensive back undercut you, it was an interception going the other way. So you assessed what you did wrong. You took responsibility for it. Now you have the opportunity. You can't let that control you. So that's my response or word picture or real life example to what you're saying. And the best quarterbacks, Tom Brady, graduate of the University of Michigan, by the way, some say the greatest quarterback ever, very competitive. Guys like him, when you see that intensity of their emotions and that they want to succeed, but at the same time, there's a level of, I'm not going to let myself get too high when I'm successful or too low when I don't do things the right way, or the situation, it's not my fault, but it doesn't go my way. And that's a critique to myself, because I'm very competitive. And when I play sports, sometimes my emotions get the best of me. And I even use that to critique myself, to say, you have to channel that intensity, but you can't let your emotions, if they run wild, rule over you, because you have to be there for the next moment and you have to be composed when the next moment comes.
That's very wise. Very wise.
What else we got, Brian? Anything else the last 30 days? Wish I could have been there with you, but
no. Well, I think, okay, as an investor right now, what's the biggest question you have in your mind?
As an investor right now, the biggest question, okay, so I'll bring it back to a chart I was looking at. I was going to buy a bunch of Sabani. Here's learning from, you could say, a missed opportunity, not a mistake, but Sabani Stillwater, the miner. And it was recommended to me to buy that under $4 per share on the NYSE American. And if I look that up now, I think it's like $20 a share trading for. And so that's an example of an opportunity that is right there before you. And I was just looking at the chart the other day. I hadn't looked at it in months, but then I was just looking at the platinum and palladium chart and saying, man, did those things run. So then I go back to the PGM miner, who is not profitable a year ago and now is wildly profitable with soaring platinum and palladium prices. And then it was a 5-bagger on the NYSE, Brian, NYSE, not on the OTC that trades $20,000 worth of shares per day.
Yeah.
And so the biggest question for me is, I use that as an example of something I almost pulled the trigger on and I didn't. I'm personally, at the personal level, I'm just looking for the next opportunity like that, to where as you said, the risk is lower because the metal prices are there. And if things work out and turn around, things could go really well. So that's where I'm looking in terms of opportunities. It doesn't mean there's not opportunities in the gold and silver, but if I'm going to do like a gold and silver junior, then I'll want to make sure that gold and silver junior isn't pricing in at this point $5,300 gold, to where hopefully, like if you do a valuation, they're pricing in maybe 3,700, maybe 3,200. So you have a little safety margin there in terms of the valuation of the company. They have to be cashed up. They have to have a real catalyst that's more than just the gold price going up. So if it's a developer that has a catalyst, or it's a company that's trying to grow from 2 million ounces to 4 million ounces while they get their permit or make a transformative acquisition, something like that, I would look for beyond just this needs the gold price. And if you do a valuation on a junior miner and you're like, wow, like this thing is factoring in $5,300 gold, like that's probably not the one you want to look for. So I don't know if that's the exact answer you wanted, but I do see a lot of opportunities in critical metals, and I've taken a stab at some of those here recently. And copper, I have copper stocks, and the gentleman from the All In podcast, Chamath, said copper should be the number one performer in 2026. Yeah, did you see that?
No.
Okay, so
right.
what that does is when I see that, I've taken that piece of information. Am I looking to him? By the way, people have said that on the show and said that to you, like for 7 years, people have been saying that, the coming supply deficit. When I see that, though, then I process that. How I process that is, okay, how will this influence general retail? There are a lot of money managers that listen to that podcast. There are a lot of family offices and high net worth that listen to that podcast. So then where are they going to go? They're going to go to the Freeport McMoran. So then how that works in my process, I think back, and then I want to be more attuned to maybe some coming big board New York copper stocks that are going to IPO. That's how it filters down in my process. Like I didn't need to hear him say that to go buy a copper miner. But then I'm saying if he's putting that narrative out there, that's going to influence a lot of people in New York. So that means I'm going to just be more attuned to like a new copper IPO and how that might play out. Because as I shared, like Nova Minerals was a gold and antimony IPO on the New York Stock Exchange. And I was aware of that thing when it was a lot cheaper and bought some under $9 a share. And then when the DOD, Department of Defense, funded that, then that thing went up 9x, like 7 to 9x instantly. Wow. And you saw that with MP Materials. So those are the opportunities. I mean, maybe I personalize your question. So that what I shared, it may not be applicable in a broader sense, except that when you hear somebody talk about their process, this is why I like to listen to different people. You listen to them, hear their process, and you can say, okay, Bill just revealed or tipped his hand. Here's some of his process. So I understand his bias. He runs a sponsored-based show, and he shared a little bit of where he looks for opportunity in junior mining, so then you can assess my process or where I might be insightful.
That's perfect.
I guess that's the two big takeaways from today is discern bias, discern process, and by process we mean strengths and weaknesses or where this person is focused, and consider those things as you filter information from these two guys or whoever else you consume information from in regards to junior mining investments. Brian and I appreciate your listenership. As Brian said, he talked to a listener of the show in Vancouver. So thank you for listening. Brian, before we go, though, at the end of your presentation at Metals Investor Forum, you launched a new service. You're a newsletter writer, so that's your business model. My business model is sponsored based for the show. What did you launch?
Launched the Diligent Speculator, which is a newsletter focused on the lower end of the risk spectrum, which is the producers, royalty companies, and what I would coin the advanced developers. And that was something that readers had told me that they wanted in terms of products. And so I'm bringing that, and that first issue was actually just published this week, and that's available for people. That's $120 Canadian per year. For the Americans in the audience that are interested, that's pretty close to free. And there's also Junior Stock Review Premium, which is the more the riskier side of the spectrum. It's developers, explorers. It's written weekly, and certainly is a little bit more money. It's $750 per year. But that's the two newsletters that I offer, and it covers the whole gambit of companies within the resource space.
Excellent. Well, thank you for listening, and you'll hear from Brian and I in about a month on the show.